Hello students, internal audit. Yes, you know external auditor. After the preparation of the financial statement, he will be appointed for the audit of that financial statement. Whether so he will give the audit report based on his audit as per SA 200 gives the audit report opinion on that financial statement. So it will be year end process. Statutory auditor. Internal auditor is appointed by the management for internal control purpose. Even he has the audit report, but not like external audit. We'll see internal audit in depth. Internal audit. Many modern enterprises have become huge and sophisticated. This has resulted in a decentralization of their activities, and consequently, the top management is remotely concerned with the day to day activities of the concern. The ICAI constituted a Committee on Internal Audit CIA Committee on Internal Audit as a non-stating committee on February 5, 2004. The CIA was constituted, now known as the Internal Audit Standard Board, with the object of formulating standards and guidance note on internal audit. As defined in scope of the standards on internal audit means an independent management function so it is an independent management function. So what do you mean by independent? No influence on the person, which involves a continuous and critical appraisal of functioning of an entity. So critical and continuous appraisal of entity. So it is not like a external auditor at the end of the year he will come and do the audit and give the opinion on the financial statement. No, it is critical means significant, important factors or concerns in the entity, and the continuous, not in the year end. It is a 24 into 7. I mean to say not year end. He will come do the job 9 to 5 every day. Continuous appraisal of entity. With a view to what is the object? With a view to suggest improvements thereto and add value to the and strengthen the overall governance mechanism of the entity. So objective is to view to improve the entity, strengthen the entity. So create additional value. overall governance mechanism of the entity, including the entity's strategic risk management and internal control system. So it includes entities strategic management and internal control system. Entities strategic management risk and internal control system. So it is an independent management function, critical and continuous appraisal of the entity. What is appraisal? Evaluation of the performance. View to improve the entity, strengthen the entity, give add evaluation to the mechanism of the entity, including entity's strategic management risk and internal control system. So there is definition of the internal audit. The internal auditing need not to be confined to financial transaction, and its scope may be extended to the risk task of reviewing whether the resource utilization of the enterprise is efficient and economical. In case of external audit, in that we see only financial transaction, correct? Money measurement concept. What about the internal audit? In case of internal audit, yes, of course, financial transaction will come, plus utilization of resource, how it is used, effectiveness of the utilization of the resources, efficient or economical. Not only effective, whether they are using economically. This would necessitate a review of all operations of the enterprise, as also an evaluation of the effectiveness of the management. We should not, however, lose sight of the fact that internal auditing is basically a service activity. The internal auditor should review and report. He is not expected to take upon himself functions of the operational managers. Who do the operations activities done by the operational managers? Example: XYZ Limited, nature of business, shoe sales. These have lots of branches, branch 1, branch 2, big branches all over India. Each branch has operational managers. Operational activities is responsibility of the operational manager. Internal auditor is not responsible for the operations. He is responsible for review and report. His job to review and report. His job not to increase the sale, give the discount. No, that is the not job of the internal auditor. His job to review and report the internal control system and operational activities. Applicability of provisions of internal audit. As per section 138 of the Companies Act 2013, following class of companies prescribed in Rule 13 Companies Rules 2014 shall be required to appoint An internal auditor, which may be either an individual or a partnership firm or a body corporate, namely, so it is a mandatory under section 138 of the Companies Act to appoint internal auditor. It can be an individual or a partnership firm or a body corporate. Very important, body corporate. One more time. Internal auditor, which may be either an individual or a partnership firm or a body corporate. But statutory auditor cannot be body corporate, but internal auditor can be body corporate. MCQ question. Possible. Again, once again, statutory auditor cannot be body corporate, but internal auditor can be body corporate. Namely, every listed company, every unlisted public company having paid up share capital of 50 crores rupees or more during the preceding financial year, or turnover 200 crores, loans exceeding 100 crores or more at any point of time, outstanding deposits 20 crores or more. So 50 in case of paid up capital, 200 turnover, in case of loans 100, deposits 25 crores. That is for every unlisted public company. So applicable for number 1, every listed company, unlisted public company, four condition: paid up capital, turnover, loans, outstanding loans, deposits, outstanding deposits. Here comes 50 crores or more, 200 crores or more, 100 crores or more, 50 crores or more, 25 crores or more. 50 crores or more, turnover 200 crores or more, loans 100 crores or more, deposit 25 crores or more. Or this loan at any point of time during preceding previous year. In this case also at any point of time. Next comes every private company having a turnover of 200 crores rupees or more, outstanding loans or borrowings from the bank or public financial institutions exceeding 100 crores or more. Third point, private company turnover and the loans. These two conditions will be applicable. It is provided that an existing company covered under any of the above criteria shall comply with the requirements within 6 months of commencement of such section. Case study: JKT Private Limited having a rupees 40 lakhs paid up capital less than 50 lakhs. Sorry, here 50 lakhs or crores? Crores. 50 lakhs paid up capital, 9.5 crores reserves and turnovers of last 3 consecutive financial years immediately preceding the financial year under the audit being 49 crores, 145 crores, 260 crores, but does not have any internal audit system. In view of the management, internal audit system is not mandatory. Comment: 9.5 crores reserves and turnover of last 3 consecutive. So turnover last 3 consecutive: 49, 145 rupees, 260 crores. So last year it is having 260 crores. It is more than 200 crores, correct? It is again private limited, turnover and the loans condition will be applicable, so they have to appoint. It is mandatory. We'll see applicability of provisions of internal audit as per section 138 of the Companies Act 2013 read with the rule 13 of the Companies Rules 2014. Every private company shall be required to appoint an internal auditor or a firm of internal auditors having, but here body corporate is not written, but he actually body corporate also is there. Body corporate or a firm of internal auditors having a turnover of 200 crores or more during the preceding previous year financial year, outstanding loans or borrowings from banks or public financial institution exceeding 100 crores or more at any point of time during the preceding financial year. Conclusion: in the instant case, JKT Private Limited is having turnover of 260 crores during the preceding financial year, which is more than the 200 crore rupees. Hence, the company has the statutory liability to appoint an internal auditor and mandatory conduct internal audit. So it is mandatory because more than 200 crores. Turnover is more than 200 crores. Who can be appointed as internal auditor? As per section 138, the internal auditor shall either be a CA or a cost accountant, whether engaged in practice or not. So if it is a CA or a cost accountant, they cannot form body corporate. So ultimately body corporate cannot be appointed as an internal auditor. So CA or a cost accountant, whether engaged in a practice or not. So practice in is not mandatory, or such other professional as may be decided by the board to conduct internal audit of the functions and activities of the companies. The internal auditor may or may not be an employee of the company. To be effective, internal auditor must be regarded as a part of management and not merely as an assistant thereto. He must have authority to investigate from the financial angles every phase of organizational activity under any circumstances. So either he can be a CA or a cost accountant. He can be a CA, chartered accountant, or cost accountant, or such other professional as may be decided by the board. Such other professional. Is he employee whether he has to be employee, he can be, or both are possible. May or may not be an employee of the company, but must be regarded as a part of the management. AB Private Limited company having outstanding loans or borrowings from banks exceeding 100 crores rupees wants to appoint Mr. X, who is a practicing cost accountant, as a internal auditor. Provisions and conclusion. According to the provision given in Section 138 of the Companies Act 2013, internal auditors shall either be a CA or a cost accountant, whether they engaged in practice or not, or such other professional as may be decided by the board to conduct internal audit of the functions and activities of the companies. Thus, appointment of Mr. X as internal auditor AB Private Limited is valid. There possibility of MCQ question with regard to in practice. CA is not in practice. Appointed as internal auditor. XYZ appointed as a XYZ, appointed as internal auditor of a XYZ Limited Private Limited. Is it correct? Is it possible? Yes. His main responsibility, however, must be to maintain an adequate system of internal control by continuous examination of accounting procedures, receipts, disbursement, and to provide adequate safeguards against misappropriation of assets. So now comes his responsibilities. First one, adequate internal control system. So he has to maintain adequate internal control system with regard to the finance or misappropriation of the accounts assets, to operate independently of the accounting staff and must not in any way divest himself of any of the responsibility placed upon him, to operate independently. Not to involve himself in the performance of executive functions in order that his objective outlook does not get obscured by the creation of vested interest. He should not perform, is not responsibility to perform executive functions. His job is to review and report, to observe the facts and situations and bring them to notice of authorities who could otherwise never know them. Also, they critically appraise various policies of the management and draw its attention to any deficiencies wherever these require to be corrected. To observe efficiencies and the deficiencies and report. To associate closely with the management, and his knowledge must be kept up to date by his being kept informed about all important occurrences and events affecting the business, as well as the changes that are made in the business policies. He must enjoy an independent status. In addition, audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, and methodology for conducting internal audit. It may also be noted that the CG may, by rules, prescribe the manner and the intervals in which the internal audit shall be conducted and reported to the board. The research committee of the Institute of Chartered Accountants of India has brought out general guidelines on internal auditing. The following discussion is based upon the above publication. This is the internal auditor and inspection auditor in software. Inspection is progress, priority low, certification finished, inspection order accepted. 2. Management functions and scope of internal auditing. Management is process by which the affairs of an enterprise are conducted in such a manner that its goals and objectives are attained through optimum utilization of all available resources within the legal, social, economical, and environmental constraints. To achieve optimum utilization of resources, management should determine the goals and objective of the concern, quantify them to extent possible, develop major policies and plans, implement them, and exercise control over such implementation. Each of the managerial functions should consistently be viewed by the internal auditor. The scope of internal auditors' work should include a review of internal control system and procedures, custodianship and safeguarding of assets. First comes ICS, internal control system, then comes safeguarding of asset. Third comes compliance with the policies, plans, procedures and regulation. Fourth, relevance and reliability of information. Fifth, organizational structure. Sixth, utilization of resources. Seventh, accomplishment of goals and objectives. So this is the scope of the internal auditors. So you should review everything: internal control system, safeguarding of asset, compliance procedures, relevance and reliability of the information, organizational structure, utilization of resources, and the last one, accomplishment of goals and objectives. On the basis of such a review, internal auditors should in his report highlight the weaknesses observed and give suggestion for improvement. We may now have a brief description on each of the above areas of review. First comes review of internal control system and procedure. So 7 points are there. Scope of the internal auditors. Scope of the internal auditor. First point, review of internal control system and procedures. Review of and procedure. Point A, the internal auditor should determine whether the internal control system is in in consonance with the organizational structure. As far as possible, controls should be inbuilt in the operating function if they are to be cost effective. Example, the establishment of a separate credit control department would not be justified if the objective of the reducing credit risk and minimizing of debt recovery period could be met through controls inbuilt in accounting and sales systems, especially in smaller and medium sized concern. So if it is a very smaller concern, how can they make a separate credit control system? That is not a good internal control system. Each control should be reviewed and analyzed in terms of its costs and benefits. It should also be seen whether the internal controls were in use throughout the period of intended reliance. A breakdown in internal controls for a specified portion of intended reliance would be need special attention. Second point, review of custodianship and safeguarding of asset. The internal auditor should review the control system to ensure that all the assets are accounted for fully. It should review the means used for safeguarding the assets against the losses, example fire, improper or negligent activity, theft and illegal acts. So he has to ensure that all the assets are accounted. Next comes, he should review the control systems for intangible assets also. What is that intangible asset? For example, credit control. Example, the procedures relating to credit control, where an enterprise uses electronic data processing equipment, the physical and system control in on processing facilities as well as on data storage should be examined and tested. You should also verify the existence of the asset. That is a second point. Third point, review of compliance with the policies, plans, procedures and regulations. So compliance procedures. Review of compliance with policies, plans, procedures, regulations. It is essential that the various functional segments of an enterprise comply with the relevant policies, plans, procedures, laws and regulations so that the operations are carried out in coordinate manner. You should examine the system of periodical review of existing policies, particularly when there is a change in the method and nature of operations of the enterprise. So when there is a change, he has to review the system of periodical review. By combining the results of his review of adequacy of the systems with the results, review of adequacy of systems, first review that we discussed here, a review of the internal control system and procedures. So combining the results of his review, the first results of first review, his review of adequacy of the system with the results of his compliance test, that is this review, third point of review, results of his compliance test, the internal auditor should be able to evaluate the effectiveness of the former, that is a compliance test. He should point out specific weaknesses and suggest remedial action. So we seen 3 points. First one, review of internal control system and procedures, review of custodianship and safeguarding of asset, review of compliance with the policies, plans, procedures and regulation. Fourth, review of relevance and reliability of information. So relevance and reliability of the information. The internal auditor should review the information system IFs to evaluate the reliability and integrity of the financial and operating information given to management and to external agencies such as governmental bodies, trade organization and labor unions. He should examine the accuracy and reliability of financial and operational records. First one, financial and operating information. Here, reliability of financial and operational records. The usefulness of the reports as well as of the records should be evaluated with the reference to their costs. The internal auditor should examine whether the reporting is an exception, that is, the reports highlight the significant and distinctive feature. Fifth point, review of the organization structure. The internal auditor should conduct an appraisal of organization performance evaluation organization structure to ascertain whether it is in harmony with the objectives of the enterprise, whether the assignment of the responsibility is in consonance with therewith. For this purpose, he should review the manner in which the activities of the enterprise are grouped for managerial controls. It is also important to review whether responsibility and authority are in harmony with the grouping pattern. Internal auditors should examine the organization chart to find out whether the structure is simple and economical and that no function enjoys as an undue dominance over others. He should particularly see that the responsibility of the managerial staff at headquarters do not overlap with those chief executives at operating units. He should examine whether there is a satisfactory balance between the authority and responsibility of important executives. So here headquarters, we have executives here. Under headquarter we have operational units. 1 operational units, 2 operational units, 3 operational unit, 4. For each operational unit, again chief executive will be there. There should not be a clash between these executives with these executives. There should not be conflict of interest. Objectives should be understood and written in policies and followed. You should particularly see that the responsibility of managerial staff at headquarters do not overlap with those chief executives at operating units. He should examine whether there is a satisfactory balance between the authority and responsibility of important executives. The internal auditor should examine the reasonableness of the span of control of each executive, the number of subordinate of that executive controls. So he has again subcoordinates: subcoordinator 1, subcoordinator 2, subcoordinator 3. Again same thing here, subcoordinators. So he has to span of control of each executive, the number of subcoordinates that an executive controls. He should examine whether there is a unity of command, that whether each person reports only to one superior. Where dual responsibility cannot be avoided, the primary one should be specified and the specific responsibility to each senior fixed. This must be made known to all concerned. Finally, he should evaluate the process of managerial development in the enterprise. This is a vital aspect in fast growing enterprise. Sixth is and last, review of utilization. Sixth is Last one, review of utilization of resource. Review of utilization of resources. The internal auditor should check whether proper operating standards and norms have been established for measuring economical and efficient use of resources. They should be detailed enough to be identified with specific operating responsibilities and should be capable of being used by operating personnel for monitoring and evaluating their performance. The internal auditor should review the methods of establishing the operating standards and norms. He should carefully examine the assumption made while setting these standards to ensure that they are appropriate and necessary. Where there is a wide divergence between the actual performance and the corresponding standards, a reason may be considered. As a part of evaluating resources utilization, identifying the facilities which are underutilized is an important function of the internal auditor. For example, it may consist underutilized machines, unoccupied storage space, huge cash or a bank balance, idle manpower, etc. While commenting on staffing, the internal auditor should pay special attention to non-productive work being performed. This would require an inquiry into the job description of the employees combined with an intelligent observation of the work being done. So this is the effective utilization of resources. Review of the utilization of the resources. Last one and last, seventh, review of accomplishment of goals and objectives. The internal auditor should review the overall objectives of the enterprise to evaluate whether they are clearly stated and are attainable. The internal auditor should examine whether to extent possible objectives are expressed in precise quantifiable terms, both monetary and non-monetary, to facilitate detailed planning to be made for achieving them. Budgeting forms an important part of such planning. This will ensure that the plans anticipate the problem areas. There should also be sufficient flexible in the plans to permit such improvements in their implementation as would benefit the enterprise as a whole. Next, integrity, objectivity and independence of internal auditor. Integrity, objectivity and independence. As per the SIA 2 Basic Principles Governing Internal Audit issued by the Council of the Institute of ICAI, the internal auditor should be straightforward, honest, sincere in his approach to this professional work. Be fair and must not allow prejudice or a bias to override his subjectivity. Should maintain an impartial attitude. He should not only be independent, in fact, but also appear to be independent. The internal auditor should not, therefore, to extent possible undertake activities which are or might appear to incompatible with his independence and objectivity. For example, to avoid any conflict of interest, the internal auditor should not review any activity for which he was previously responsible. It is also expected from the management to take steps necessary for providing an environment conducive to enable the internal auditor to discharge his responsibilities independently and also report his findings without management interference. In case of a listed company, the internal auditor may be required to report directly to those charged with the governance. correct, such as the audit committee instead of chief executive officer or the chief finance officer. The internal auditor should immediately bring any actual or apparent conflict of interest to the attention of appropriate level of the management so that necessary corrective action may be taken. Instead of going to the CFO, CEO, you have to go to direct audit committee or those charged with the governance. Qualification of internal auditor. The internal auditor should have special expertise necessary for evaluating management control systems and especially financial accounting controls. So, first one, specialized expertise. Second comes accounting and finance functions provide basic data for management control of an enterprise. Therefore, the internal auditor must have accounting and financial expertise to be able to discharge its duties. So, accounting and finance functions. Accounting and finance functions are there. So, this is specific expert in. You should be expert in the accounts and the finance. Third point. Internal auditor should is also expected to evaluate the operational performance and non-monetary operations control. This requires basic knowledge of the technology and commercial practices of the enterprise. So you should have basic knowledge of the technology and the commercial practice of the enterprise. Fourth point. You should also have a basic knowledge of commerce, laws, taxation, cost accounting, economics, quantitative method, and ETB system. So again, basic knowledge. Basic knowledge of law, taxation, EDP systems, commerce, laws, taxation, cost accounting, and economics. Cost accounting and economics. An understanding of management principles and techniques is another essential qualification of internal auditor, as also the ability to deal with the people. Understanding management principles and techniques. Understanding management principles and techniques. Last point, by his conduct, the internal auditor should provide assurance to the management that the confidentiality of such information will be maintained. So you should give assurance with regard to the confidentiality of the information. So these are the 6 points. Special expertise, accounting and finance function, expert in the accounts and the finance, basic knowledge with regard to technology and the commercial practice of enterprise, basic knowledge in the law, taxation, EDP system, commerce, cost accountant, economics, understanding the management principles and techniques, assurance with regard to the confidentiality of the information. This is the qualification of the internal auditor in general. But who can be internal auditor? You have to go with the provisions of the section 138 that already we discussed. who can be appointed as internal auditor. Okay, next comes internal audit report. Not so important for the examination point of view. It comes title, address, report distribution list, period of coverage of the report, opening or introductory paragraph, identification of the processes and functions and items of the financial statements audited, and a statement of the responsibility of the entity's management and the responsibility of the internal auditor. Objectives paragraph, scope paragraph, executive summary, observations and findings, comments from the local management, action taken report, date of the report, place of signature, internal auditor signature with membership number. This comes under audit report. So next, essential features of good internal audit report: objectivity, clarity, accuracy, conciseness, constructiveness, readability, timeliness, findings and conclusion, recommendation, auditor's view, summary, supporting information, draft report writing and issuing the final report, follow up. The internal auditor should review whether the follow-up action is taken by the management on the basis of this report. If no action is taken within a reasonable time, he should draw the management's attention to it. Where the management has not acted upon his suggestions or not implemented his recommendations, the internal auditor should ascertain the reasons thereof. Therefore, where the management has accepted his recommendation and initiated the necessary action, that internal auditor should periodically review the manner and the extent of implementation of the recommendations and report to the management, highlighting the recommendations which have not been implemented fully or partially. Next comes relationship between the internal and external auditor. Relationship between internal and external auditor. The scope and objective of internal audit are depend upon the size, structure of the entity, requirements of its management. Three things: size of the entity, structure of the entity, and the requirements of its management. As stated earlier, the internal auditor operates in various areas such as review of accounting system, review of the internal control, examination of financial information, examination of operating information for the benefit of the management, examination of the economy, efficiency and effectiveness of operations, including non-financial controls of various tangible assets of the entity. While operating in these areas, there is a lot of overlapping between the work of the internal auditor and the external auditor, correct? The work done by the internal auditor has an important bearing on the work performed by the statutory auditor, as the evaluation done by the internal auditor in respect of internal controls, reliability of information, verification of assets is also required to be done by the external auditor. The function of an internal auditor is an integral part of the system of the internal control. It is statutory requirement 2 as per section 138 of the Companies Act 2013, where the audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity and methodology for conducting the internal audit. However, it is obligatory for the statutory audit. This is asked once in the examination, May 2015. I hope so. It is asked: review of the internal audit function has become the statutory responsibility for the statutory auditor. Again, review of the internal audit function has become the statutory responsibility for the statutory auditor. Correct? So this is the answer for that. It is obligatory for the statutory auditor to examine the scope and effectiveness of the work carried out by the internal auditor. Whose responsibility? Statutory auditor's responsibility. It is obligatory. For the purpose, he should examine the internal audit department of the organization. That is second point. The strength of the internal audit staff, their qualification, their powers. The extent of independence exhibited by the internal auditor in the discharge of his duties and his status in the organization are important factors for determining the effectiveness of his audit. But so far, the practice of audit being conducted jointly by the internal auditor is of great assistance to the statutory auditors. The external auditor should, as a part of his audit, evaluate the internal audit function to the extent he considers that it will be relevant in determining the nature, timing and extent of its compliance and substantive procedures. Depending upon such evaluation, the external auditor may be able to adopt less extensive procedure than would otherwise be required. So these 3 points are very important. But when I see the I see examiner comments, I see for this question of review of the internal audit function has become the statutory responsibility for the statutory auditor. Suggested answer given these points as we read out. In examiner's comment, it is given many candidates wrote about the evaluation of internal control instead of need for review of internal audit function. They also fail to explain the factors that should be considered by the statutory auditor while reviewing the work of internal auditor. Okay, let's move on. Difference between internal and external auditor. Basis for comparison. Meaning, internal audit refers to an ongoing audit function performed within an organization by separate internal auditing departments. External audit is an audit function performed by the independent body which is not a part of the organization. Examination. Internal auditor examines the operational efficiency. External auditor examines the accuracy and validity of the financial statement. Appointment. Internal auditor is appointed by the management. External auditor is appointed by the members in the general meeting. Users of reporting. User of internal report is management. User of external audit report is a stakeholder. Period. Internal audit is a continuous process throughout the year. External audit is done once in a year. Opinion. Opinion is provided on the effectiveness of the operational activities of the organization. Opinion is provided on the truthfulness and fairness of the financial statement of the company. Status of auditor. Internal auditor is an employee of a company, thus less independent. External auditor is an independent person. Let us revise once again. External auditor, internal auditor. Internal auditor and independent management function. Critical and continuous appraisal of entity, view to improve entity strength and the entity, give add value to the company. Entity strategic management risk and internal control system. Operational managers. We see in one example of shoe sales. Section 138 of the Companies Act. Individual, partnership, body, corporates can be the persons of internal audit applicable to listed company, unlisted public company, paid up capital having 50 crores or more, or turnover of 200 crores or more, loans 100 crores or more at any point of time during previous year, or deposit 25 crores or more at any point of time during previous year. Who can be appointed as internal auditor? CA or a cost accountant or such other professional as decided by the board. Employee, yes or no, both, or yes or no. CA in practice whether required? No. Responsibility of the internal auditor. Adequate internal control system to operate independently, not to perform executive function, to observe effectiveness, efficiency and give report and review, associated closely with the management, report of changes of policies, etc. Scope of internal auditor. Review of internal control system and procedures, review of custodianship and safeguarding of assets, review of compliance with the policies, plans, procedures and regulations, review of relevance and reliability of information, review of organization structure, review of utilization of resources, review of accomplishment of goals and objectives. Then we see in integrity, objectivity, independence of the independent auditor, that is straightforward, that are all. Qualification of internal auditor. Special expertise, accounts and finance function. You should expert in accounts and finance. Basic knowledge with regard to technology, commercial practice of enterprise. Basic knowledge with regard to law, taxation, EDP system, commerce, cost accounting and economy. Understanding the management principles and techniques. Assurance with regard to the confidentiality of the information. Then we see in the external auditor and internal auditor difference, and the need for the review of the internal audit function has become the statutory responsibility of the statutory auditor. So next we will see management and operational audit. Thank you.